The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends. As always, we like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
So we're up. Is volume blowout? No. 1.9 billion shares, but a little bit better than maybe some of the down days we've had by maybe just a hair. Normally, want to say, volume kind of really has to be a lot more on the way down than the way up. So tie goes to the runner. I am extremely minimalistically bullish. And what I mean by that is I suspect that a lot of stocks as we go into earnings are going to be pushed right up to the absolute perfect point where many of them will fail. But as we start over the next few days and go into earnings on Friday, I'm not expecting a whole lot. I would not be long the indexes. I don't think that there's much there. The risk reward is pretty horrible. Something bad happens. Individually, though, I think that there is a place to be in this market. That would probably be right now. Commodities look like they're really picking up. And I suspect the other side of that coin is stocks that have a huge short interest. We've got an email already in the queue for that. But I don't think there's much in the indexes. I don't think there's much to be had in the NASDAQ. But I do think that individual stocks that have monster short positions should have some big bounces if the market can just go sideways. But they've kind of X'd out the downside of the market. There's no juice to really push a lot higher. But could we go a couple of days and be, 3, 4, 5 points higher in the S&P? I don't see any continuation of today. But I don't see a lot of reason to be long. I don't see a lot of reason to be short. But my guess is we're going to see very specific stocks that have a lot of short interest probably move higher if they can just go sideways for a while. And we'll talk about that and more as we go through the show. But we're up 18 points in the S&P cash. We had an opportunity to turn down with some volume today. Probably the most bearish thing we could have had in years is if we would have been down about 10 points from here right now, maybe 24.33. Never really got any move after the initial move up in the morning, and not a lot of sellers, not a lot of buyers. My guess is we could just drift up a few points a day and kind of frustrate most of the longs, certainly all of the shorts. And so I think this what we have is kind of a day out here where if you don't pick the right stocks and maybe the right commodities, there may be no money to be had here for a few weeks. Of course, Friday we get the first taste of earnings with bank stocks. The market reacted fairly well today to Janet Yellen's testimony that is kind of hawkish. Very long-term for the market, not short-term. But they're going to be taking out $3.5 trillion, but that $3.5 trillion is going to be taken out between now and 2022. So we've got kind of 5 years. Could they pull out a $500 billion a year? They could. Would the pain be that big? No. But I think that's kind of what they're looking at now is trying to get $500 million off the books each year. And if they have a really good year, maybe a little more. But at the moment, everybody is as bullish as you can stand. Literally, I can't find anybody that wants to be short the market. or very few people that want to be short the market. But I don't think either longs or shorts are going to make a lot over the next couple of weeks until we get some kind of real feel for the market. Probably 24.50 something is the high, and probably 24.30 something is the low. My guess is we're going to just kind of bounce around in those levels. Maybe if we get through earnings and there aren't a lot of downside surprises, maybe the market can go higher. I just kind of see that there's probably not a lot of juice individually for the S&P to go higher, but the euphoric belief of many makes me think that you just want to be very careful. Now, for what I'm looking at, options are dirt cheap right now. So we'll talk more about that as we go through the show. And, of course, as always, we like to start the day off with a little history.
That it's all just a little bit of history repeating.
And what else do we have going on? Well, history today, you can give me a call at 877-927-6648, by the way, or email me at path@tfnn.com. We got a few emails in the bin already. On this day in 1854, the very first Kodak moment, George Eastman, future founder of the photographic industry, is born in Waterville, New York, the son of Maria Kilbourne and George Washington Eastman. His Eastman Kodak Company, which he founds in 1880, will make it possible for anyone to immortalize the most fleeting of memories. And he continues to, he was a pretty good guy. I was actually reading about his unrelated brother, Mr. Land, who came up with a Polaroid camera, and just how much he did for the spy business, satellite spy business. Pretty interesting, all the stuff that he did for the government, and especially a lot of the specialized films and a lot of the other things he did for our spy satellites in the 60s and 70s. Most people don't know, but there was a secret spy organization that had almost the same budget as NASA did. No one ever talked about it, and a lot of rockets blew up that no one was ever told about. But we had people orbiting the Earth a lot sooner than anybody ever thought we did. But it was always, it's probably still going to be top secret. But we had like Skylab things with people up there taking pictures, all kinds of stuff. And still, there's a few people that will talk about some of the things that we did do to spy on Mother Russia in the depths of the Cold War. But kind of interesting what these guys did. Kodak did a lot with the government, too, in the First World War, actually. Worked with a lot of the governments for putting cameras in balloons. Can you believe it? On this day in 1854, Mr. Kodak and his Kodak moment is gone. Technology has surpassed him, and now it's all done with an iPhone. Everything is fleeting. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And what do we have going on out here? Kind of interesting. I have yet to figure out exactly what this is going to mean. We talked about this maybe 6 months ago. But a new requirement for security firms to report certain transaction in Treasury securities to FINRA was implemented successfully yesterday. I guess that means nothing blew up, providing regulators with a tool to increase understanding and enhance surveillance of this bellwether market. The rule requires FINRA members report secondary market transactions in Treasury securities, except savings bond, to trace the FINRA's trade reporting and compliance engine. We may actually, their plan from FINRA is to really start policing the bond market a lot like they do the equity market. That probably will help with a lot of transparency. I don't know what this has to do with 1979. I think I just left it up there and forgot. But that's about it. Of course, Friday we talked about it already. We've got earnings. I suspect that they're ramping up everything. And again, you probably don't want to miss. A lot of these stocks are priced for perfection. And if any of these kind of miss on revenues, I suspect that there's some downside. JP Morgan, Citigroup, Wells Fargo, PNC, and Infosys. Infosys, kind of the only non-bank out there, but it may have its own particular issues that we've talked about. So let's get started on some charts here. Hopefully everybody will get. We had one question out here already. Is AAOI. I'll take a look at this one. I wanted to know about this one and short. Let's take a quick look at this AAOI, see what it has. You know, it's got a good amount of short interest in this. The downside I see is it's probably looking to test 75.59. So that's kind of about all you've got. The energy is not all that exciting off this low. Last couple of days were kind of short. I'm thinking that you want to look at stocks that have pulled back with huge short interest that maybe have bottomed. So this one, I don't know if you're long it already. It doesn't look like much more than 75.59 is going to be your target. So I can't see why you would go long here today. Just like this thing came down with a heavy volume of 5.3 million shares back on the 9th of June. You're kind of into that. So, and you don't have much volume today. So, not one that I particularly like. I do see the huge short interest coming here the last 3 days. So my guess is this will probably make it up to that 75.59 and start moving some stocks out. Let's take a look at some of the big guys out here now. We've had 2 good days of Amazon being shorted. Again, this is where you start watching what's going on at these highs. You had 7 million shares on June 19th that kind of reversed out of that high of 117. You got to 106 today, but volume is fairly light with this 2.44 million shares. That's why I'm not suspecting that there is a whole lot to be had by hanging on to these stocks in the next few days. Most of these, I think, are just going to hold up here at these highs as they come into the earnings view, which I think Amazon's a little ways away. But this thing could just hang around $1,000 and do nothing until earnings. Maybe the last couple of days they'll push it up right in front of earnings. But I don't see a lot in that. NFLX. Let's go, because these tend to be, Amazon doesn't tend to be shorted that much. Netflix tends to be kind of perennial high short stock, but this has just been the difference. Last 8 or 9 days, there haven't been a lot of people shorting Netflix. Volume's kind of the same. There's just not that much to it out here. Let's get a little shorter time frame. You did have a fairly decent clue, which is the June 15th low that they had 14 million shares at 147.30, got into 144.25, did so with about a third of the volume. So you knew this thing was probably going to bounce. We talked about a lot of these stocks, even Apple, which is not participating, did have some kind of nice light volume bounces. But energy on this one is actually more than the energy on the way down. You've got, 5.5 million shares. I think we're into Netflix and earnings next week, if I'm not mistaken. Hang on a second. I don't see it on my list, but I thought maybe it was there. Yeah, Monday. Excuse me. I just went past it. Monday after the bell is Netflix. So I can expect this to probably go up there again. This one is doing just the opposite, which is, a lot of times you see 20% of the shares each day, intraday at least, shorted on Netflix. It hadn't been that bad, but it has gone up. It was down in the 12% range, and now it's around the 15% range. But enough volume. Can this thing get up to 166.87 for earnings? I wouldn't be surprised. There's enough shorts in a lot of these stocks to maybe get a little pop. Again, I don't see the risk reward in it, but who knows? What else do we want to look at quick? Microsoft was kind of up. And I didn't look at any news out here. It had a nice bounce. Not a lot of juice either on this one. Energy's just about the same, maybe a little less on the way back up off this 68.02 low, but not enough. Again, you're going into a 25 million share high at 71.71 today with about 10 million shares. So again, we're probably going to hang up here at these highs as we go into earnings. I don't look for any of these things to back off. But at the same time, these things are going into some fairly high volume down days with not much juice. And your target is probably this high at 72.89. So I don't understand trying to buy it here for $1 to the upside or $1.50 if everything works out beautifully. My guess is a lot of these stocks either go sideways and or miss revenues and then have a big problem. Microsoft probably looks kind of in line to me. Take a look at Intel. We had a lot of calls earlier in the week. Again, you can give me a call at 877-927-6648. Intel's nice little bounce out here. Again, my guess is that this one's probably one of the better buys sometime between now and the end of the summer. I would love this thing to bounce to kind of consolidate out at about 33.50, somewhere in that range. Again, everybody in the market hates Intel now and is pushing the high flyers like NVIDIA. My guess is that over the medium to long term, NVIDIA probably comes back to a normal multiple, and Intel probably gets a little higher. But it may take a little while. What else do we have? Well, we'll look at Apple when we come back. Again, you got plenty of time to give me a ring, and of course, give me a call and email me at pat@tfnn.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV, Directions Daily 20-plus year bull and bear 3 times ETFs, direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. What do we got going on out here? The market's starting to clip up just a little. Up 19.5 points, volumes to 2 billion shares. Again, we're kind of moving up into earnings. It's going to be on light volume. These stocks are going to be very vulnerable. If you were doing anything, I would probably, if it continues to look like this, and you just kind of come up a couple of points or something, or maybe 0.5% into earnings. If you're back up at these highs, I think maybe you just sell the day before earnings if you're not really confident. My guess is that they will ramp these things up into it and price them for perfection as they go into earnings. So, I don't see any reason why you have to be short through this until we get some kind of, or enough misses to make anything change. But my guess, again, as I said at the beginning of the show, is you're not going to be retiring on any of the money to the upside in these next few days and weeks. My guess is that, if you get into the right stock that has a lot of shorts in it, maybe there's some decent upside. But I'm thinking other than short squeezes, there's probably not a lot of money in it. Could you get 30 points in the S&P over the next couple of weeks? I think that would kind of be the high side of my target out there. So again, light and variable trading. Wouldn't be surprised if we even come back down a little bit on a couple of days. But that's why I would much rather be picking up stocks at the lows than trying to run out here and buy them at the highs, other than maybe just a handful of days before earnings and making just a little change on them. But again, I'm not that kind of trader. I don't like that risk reward. And we've got some nice signals out here that at best we're in the B to C of an ABC down. Now the SMHs look horrific. We've got a little less than 2 million shares going at an 8 million share high. So it's not like I can say that there's much going on. But at the same time, we're so close to earnings to a lot of these, I don't expect anybody to fold their cards before they go in. Most of these are priced for perfection, so that's kind of it. But let's take a quick look at NVIDIA. So, kind of up today. Is there a lot of volume in NVIDIA? No. Is there enough? I think so. You're really looking at the 20th to be the most generous, the June 20th high at 161.74. We went through that today. That has 27 million shares. You got 22 million shares. So could you tie that today? I think you could. But that June 9th down day with 92 million shares is the tough one. So you got a lot of people out here probably wanting to get their cash back. Could you have one more good earnings call on NVIDIA? I think you could. Maybe even another one, maybe into the fall. But I think that's when the competition is going to be rather severe. They've had kind of a cakewalk without much in the way of any competition in machine learning. And I think that's drawing to a close. I will be doing a webinar. See out here. Okay, we'll look at it. We'll be doing a webinar the 26th, and it will be for any subscriber to either of my newsletters. That will be just on machine learning, what it is, who's involved in it, and how you can make money investing in that sector. It will be fairly involved, and I'm doing a lot of work on it. It'll be interesting. It will not be like presentations we've done in the past. Let me put it that way. I'm putting a lot of pre-production effort into this. But anyway, you're on 92 million shares there. Let's take a quick look at Facebook. Okay, it's breaking out today. It's going to do so on light volume, needs 35 million shares for the June 9th high. We got 16 million shares so far. But again, I don't think it's going to matter. I think that we're about as euphoric as it gets, and these guys are going to have to really have the goods come earnings day. But I don't expect anybody to believe that this thing's going down. So could it just kind of edge up or even hang around here till earnings date? I think that there's a chance of that. What else are we looking at here? SKWS. Did we talk about Apple enough? SKWS. SK. Is it SK? SW? KWS. Figure it out eventually. Why am I not figuring out Skyworks Solutions? Skyworks. SKWY, SWKS, I guess. If I can actually get that right. There we go. Skyworks Solution, of course, they make a lot of parts for the iPhone. They're kind of up on light volume. With Apple not really moving, kind of interesting, especially even the sell-off in Apple. You're now in a day that came down with 2 million shares on the 26th of June. You're up with 1 million shares now. So, what are you going to get, 1.5 million shares before the end of the day? This looks like it could get up into the 106 area. And, of course, all these things have earnings on the way. What else do we have? We did Apple. Let's take a quick look at Tesla, TSLA. This is not one that I really feel confident about in a short squeeze, although it has monster shorts in it. I would still rather be short this thing. Looks like an ABC on the way down, but this could get to 350. But again, it depends on how euphoric the market continues to be. It's kind of problematic. I haven't looked at this one for a while. We were short this one when the market moved down and caught it fairly decently. Since then, it's gone back up to its previous highs, come back down. It's coming back up again. This is Herbalife. This thing's been bouncing at the $74, $40, $75, $4.50 range. It had very light volume in comparison on the 26th of June. That day had 800 and some odd thousand shares, up on 253,000 shares on this one. This one is going to have to produce. It seems to be one of the weaker ones out here. And the shorts have kind of left this thing because, of course, it was a football for years. So short interest is down on this one. But my guess is that it goes in earnings, too, at about $75. And too much of a gamble to play these on earnings. But might get a few bucks on the way up into those earnings. We'll be back shortly.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
John Logan has been hard at work making the TAS Profile Scanner Plus the best it can be, and he'll be hosting a special hour-long webinar for all TAS Profile Scanner Plus subscribers this Wednesday, July 12th from 5 till 6 p.m. Eastern. Right now, you can get a 30-day free trial to this amazing piece of software. See for yourself how it tracks 5,000 financial instruments in real time, over 17 different stock exchanges, U.S. futures, and currencies. This piece of software will change the way you trade, and it can be used with any trading methodology. The combination of price and volume is what makes market profile-based analysis so unique. We've opened up a 30-day free trial to the TAS Profile Scanner Plus, even if you've had a trial before, so now is a great time to sign up. You also gain access to John's July 12th webinar, How Price, Volume, and Time Make Market Profile Unique. Sign up for your free trial to the TAS Profile Scanner Plus right now on the front page of TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Zoe's Kitchen, ZOES, one of the IPOs that didn't do all that hot off the bat. Looks like it's basing out. Greg from California wanted to look at this one. And this is kind of what I'm talking about. You want to see some nice patterns, some nice basing out, and maybe some real cheap options. I don't have time to take a look and see at these options. But not a bad pattern out here to be buying these. This thing does have a fairly decent short interest. Let's see on this. Yeah, a lot of days, 20% or close to 20% shorts in this. I think you're looking at something decent out here for some lows. What do you have here? 1150. This thing only really needs to close above 1152 to really be in the buy zone, and you're going 4 days out here. See what we got, if there's anything in options real quick. See what these things are. Okay. Option chain. Okay. So let's look at August 18th options on this. Yeah, you got 1250s or 32 cents to 50 or so. Yeah, I don't like that. I think the only play on that one would be the equity. I'd have to look at these a little tougher to figure it out. The problem with this one is you really want to get this thing one back down, if you could, on a day where the options really kind of pull back. The problem is you probably need to hold this one long enough that the options might deteriorate. There isn't a lot of action in this one. So I guess on the way up, the options would probably melt. It's not a big enough name and not hated enough. It's hated, but not hated enough. So I think you would have to own the equity here, and you'd have to just say anything, close anything below $10.94 is a problem. But you based out here for like 4 days, volume's nothing. You got a little doji day out here today. I think you got something here. This may be one of these ones that just starts a short squeeze, and nice upside on this one. You could get into the 14s on it on a fairly decent short squeeze. So that is an interesting possible play. I just wish that the options were probably better on it. But a little stock like that, not a lot of people talk about it. Kind of have to find ones that are more hated, like Tesla, that have very liquid markets out here. What else do we have out here? We looked at, let's take a quick look at Priceline, PCLN. This thing had been very weak at its highs, and guess what? It's still weak at its highs. 1927 on May 8th had almost 600,000 shares. 2 days ago, 360,000 shares. Yesterday, 318,000 shares. Today, 188,000 shares. But again, you're going to have to look and see when these earnings calls are. If they're within the next 2 weeks, these things are probably just going to hang out at these highs and be up on no volume. And that's where I'm saying a lot of these things are just dangerous and making very dangerous chart patterns. I can't see being long here for any reason. But again, on earnings, you may get an opportunity to pull the short sales on these, as I think these things are absolutely priced for perfection and beyond. But that does not mean they're going to fail before someone actually comes out with earnings. That one had a big drop in earnings last time because it was short revenues. My guess is it's going to do the same thing, but no one wants to sell any of these. Let's take a look out here. Take a quick look at the IBB. You kind of had your pullback here. You're up again on light volume. Again, I think we start getting a couple of biotechs next week, but I would not be surprised to see this thing at about 320 coming into those earnings, just drifting up on light or no volume. Again, today is not right home on volume for any of these things to the upside, but they could just have a short squeeze back up to these previous highs. Question about Qualcomm and a possible bullish entry. Let's do this, which is, again, this is one of those stocks that's in one of the patterns that we talked about for the triangle patterns. And you've got, you basically have this thing kind of in something like this right now. And I'd really like to see it break out of that pattern and give you a false breakdown on light volume and then turn back around. What else did we say? I mean, we talked about this one in the GLD. Or was it in the GLD? Or GDX? May have been one of the two. GDX. So we can show you one that actually kind of did it here. Let's go to this. We were looking at and annotating this one before, and there was kind of a bigger pattern. There was something about like this. Get back up here, longer term. Anyway, it was something like this, and we had a few breaks out of the last few days, and now it's right back into it. That's kind of what you're looking for in these stocks. 80% of the time, the first move out of these decreasing range patterns tend to be a head fake, and so I tend not to play them. Like gold in these, you're much better to wait until this one comes out of that pattern and then back up. You had a couple of nice days and a little doji out here today in the GDXs. But to me, this is a much better bet than trying to figure out that this thing's going to go the right way the first time it goes higher or lower. Actually, it's pretty counterintuitive to these with higher lows and lower highs as you get into that. When it first breaks out of that pattern, it's almost always a head fake. And I kind of see that in maybe the gold out here. Actually, I'm a little bit liking that gold sector a little bit more than I have. I haven't been played gold in a long time. Just haven't been any good signals. That may be the first decent one in a while. Question about MU. We'll take a look at that. We'll look at Micron when we come back, our last little segment out here. Of course, I'll be having a presentation on machine learning companies and investing, and we'll be talking about that here in the days to come, and start running the promos for it. But it's going to be the 26th. I think you want to get in on that. We'll be back in a second.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're looking at Micron, up on light volume today. I think a lot of these stocks are kind of out of juice. Off their bounces off the recent lows here, but that does not mean they're going to pull back. I think a lot of these things are just going to go sideways or a little higher into earnings, but for the most part, they're just going to hang around here, and the S&P could do a lot of sideways action. Generally, the stocks you want to be in, if you're going to try to make some money in a sideways market, tend to be those with high short interest that have bottomed or have found a temporary bottom, and the people around Wall Street feel that it's probably time to come out with a few phony articles and run those shorts. So those are the ones to be most worried about, and that is being short a stock that has high short interest and the stock going sideways. Some of these things look like they've bottomed out very short term. Again, am I worried about much higher prices? I just don't, maybe we get 30 points higher in the S&Ps here, but I just don't see a whole lot of risk reward in that, in the indexes, and think maybe the place to be is in individual stocks here for a little while, and especially those with high short interest, because if they start moving up, you're going to have some buyers on them. The rest, I think, could just kind of go sideways for a while. Micron, as we said, this kind of up here on light volume, so there's not much going on in there. To see what else we have for emails. We already looked at the SMHs. Let's take a quick look at the TLT. A lot of cross signals out here. Kind of interesting to see that Janet Yellen really didn't do much to move these around today. Come on. There we go. Did bounce a little. Pretty much off where support should be, which is 122.50. That was the gap up of May 17th with 11.2 million shares. I dislike that this thing came down and you had pretty much 10 million shares back into that. So this is not one of the ones that I think has a lot of room to run the upside, but a little bit better as it kind of gapped up into this gap down from the 6 just a few days ago. But again, not much juice, 5 million shares in the TLT compared to this gap down that had almost 11 million shares. Again, I think we're seeing a lot of these places start to go back into some narrowing trading ranges, and kind of a couple things you can do. Go to commodities and start looking, because they tend to move when the equities don't, and especially when the equities go sideways. And, of course, highly shorted stocks where people squeeze them. So, we might start looking at some of these XLE. Take a quick look at that. You're probably going to want back into one of these. Popped a little higher. You didn't get much. I think maybe you're a couple of days away from finding a fairly decent place to buy into these XLEs. You may get one little pullback out here, but you did have a good signal on this one. June 21st, $63.64, 27 million shares. You spiked through it on the 7th. You did so with 16 million shares. You kind of went up here. You've got your first kind of little pullback, but somewhere around that 63, 64 on light volume is probably where this thing is going to start facing out, and you have the opportunity or possibility of maybe finding that sector start to move up. You had a spike in UNGs. So these are probably going to be where the action's going to be if you want any real movement. In the meantime, so when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.